Over the past 2 years, buying a car in China has become less like shopping and more like high-stakes leverage trading on the crypto market. You never know if the rock-bottom price you snagged today will turn you into a caveman stuck at the peak of Mount Everest by tomorrow. When the manic bets pile up to the limit, who pushes the button for the crash? When the feast turns into a chaotic mess, who is the sober one leaving the table early? Hello everyone, let's cut the small talk and get real. Hasn't it been the case for the last 2 years? You have those 1 or 2 friends in your WeChat groups spamming posters with headlines that looked like horror movie titles. Electricity cheaper than oil. We are showing our cards. Prices slashed to the bone. This month only. It's as if cars are suddenly free. You walk into a dealership and the sales guy looks like he's about to pay you to drive the car away. Maybe throw in a crate of eggs just to sweeten the deal. You click the link and what do you see? A 2,000 RMB discount and a free floor mat. You feel your intelligence has been insulted. But you dare not speak up. Why? Because next week that car might actually drop by 20,000 RMB. Buying a car has transcended consumerism. It has become a magical mix of gambling, espionage, and performance art. You never know if you've caught the bottom or if you're standing on a cliff edge. However, this hallucinatory era of everyone guessing prices and car companies stabbing each other in the back seems to be coming to an end. According to the CPCA, that's the organization that counts car sales and gives automotive CEOs nightmares, the data says that in July, only 17 models saw genuine price drops. What does that number mean? Last year, same time, 23 models. The year before, during the bloodiest phase of the war, also 17. The numbers look similar, but the madness has clearly receded. Since April, those drop 90,000 RMB instantly bombshells have vanished. Instead, we're seeing mild subsidies and finance schemes. It feels exactly like a drinking party that has lasted 3 days and 3 nights. At the start, everyone was bragging, clinking glasses, shouting to see who was louder. Now, everyone is slumped in their chairs, eyes glazed over. No one wants to lift a glass. Everyone is just praying for the sun to come up so they can go home. The price war has finally hit garbage time. But how did this war start, and why, right now, is everyone putting down their weapons? Rewind 2.5 years. The market was singing and dancing. The traditional gas-guzzling giants were living the good life, banking on century-old legacies, changing a shell on a model and selling it for another decade. Huge profits. On the other side, the new forces, the EV startups, were burning investor cash like firewood. If you didn't say disruption, ecosystem, or user thinking at a press conference, you didn't deserve a microphone. Everyone stayed in their lane. But beneath the calm surface, the undercurrents were raging. First, overcapacity. For years, every city wanted GDP. Every city wanted jobs. So they built car factories. Think of it like this. A neighborhood has 100 steamed bun shops, but the residents only have stomachs for so many buns. What happens to the surplus buns? They rot in the steamer. Second, the economy. We all know the score. Wallets got thinner. A car is a big purchase. People started hesitating. The customers in the bun shop started dieting. Then came the fatal blow from the Iron Man who doesn't play by the rules. Early 2023, while others were trying to raise prices, Tesla flipped the table. Imagine in that struggling bun shop neighborhood, the biggest shop suddenly announces the meat bun that was $5 is now $2.50. What do the other shops do? They have 3 choices: drop prices and bleed money, hold prices and watch customers leave, or close down. Tesla's logic was pure internet warfare. Use cost advantages to slash prices, trade profit for market share, and strangle the competitors in their cradles. Chaos ensued. March 2023, Hubei province launches subsidies, 90,000 RMB off. BYD shouts, oil and electricity, same price. The traditional fuel cars, they were like medieval knights in heavy armor suddenly facing modern soldiers with machine guns. It was a slaughter. Consumers voted with their wallets. Why buy a gas car when the EV is bigger, smarter, and cheaper? We saw the magic show. Volkswagens, Audis, BMWs, even Range Rover slashing prices by half. This is the classic prisoner's dilemma. Everyone knows that if we keep dropping prices, we all die. But no one dares to stop first. As Li Auto CEO said, price cuts might not increase sales, but they definitely hurt the opponent. It's like a movie theater. One person stands up to see better, the person behind him has to stand up. Eventually, everyone is standing. Nobody sees better, and everyone has sore legs. But no one dares to sit down. The tricks got dirty. Fake low prices for cars that don't exist, regional discrimination, buying a car became a math exam. And the result? The price cuts didn't bring a sales boom. They just made people wait for the next price cut. The dealers became the cannon fodder, the meat in the sandwich. Manufacturers forced stock down their throats. Dealers sold cars at a loss. We saw 4S stores closing, protests. The industry profit margin in 2024 dropped to 4.3%, worse than putting your money in a savings account. So, why is it cooling down now? Simple. The landlords are out of grain. First, they can't afford to bleed anymore. Even the winners like BYD are seeing thin margins. When burning cash doesn't guarantee a monopoly, but might just burn you to death, capital cools down. The ammo is gone. Second, the dust has settled. The weak have been purged. The ones left standing have real skills. It's halftime. Time to heal and reload for the next phase. Technology, intelligence, and global markets. That's a more expensive war than simply price cut. Third, and most importantly, the visible hand. The government stepped in. Since May, regulations and initiatives have been signaling, stop the madness. It's like the headmaster walking into a rowdy classroom. Even the naughtiest kids sit down. Plus, the trade-in policies are helping move metal without destroying value. So the CPCA data is a signal. The drunkards have put down their glasses. But the war isn't over. It just changed shape. No more epic price crashes. Instead, we get more features, same price. For you, the consumer, it means a safer time to buy. But wake up to reality. A car is no longer an asset. It's a consumer electronic, like your phone. It depreciates the moment you touch it. The days of driving a car for 10 years and selling it for a good price, gone forever. This 2.5-year war was a brutal cleansing, fueled by tech change, overcapacity, and economic cycles. The smoke is clearing, but peace, no. The new war has already started in places you can't see. As the modern poet sighs at the wreckage, a ruthless brawl in the auto ring, where deafening war cries and marketing sting. You strike the foe, but bleed out twice as fast. With hollow pockets, the die is cast. Red eyes stare at the balance sheet's decay. Who screams, "I fold," and walks away? The table flips, the silence is deep. Even the rich have no harvest to reap. That is all for this episode. Thank you for watching. We will see you in the next video. Goodbye.